Hey there, everybody. Thomas Wood with ValueCharts.com, and today we're going to take a look at a really good trade we had in crude oil earlier today in the futures trading room, where some people may still be in it. I don't know if anybody's still in it right now. When I was closing the trading room, it didn't sound like anybody was still holding on to it, but it worked out really well. If you held on to it the entire time using the momentum trender as your filter for when to exit, you would have taken out about $3,000 a contract with about $100 a contract risk. So you're talking about a 30 to 1 reward risk ratio. Now, how does this work? How do you set this trade up? Why did we think the crude oil was going down? Why were we selling crude oil this morning? Well, the reason we were selling crude oil is because of a 30 and 60 minute bearish divergence. So crude oil, you can see the weakening momentum all the way across here, even though prices poked all the way up where this red arrow is to moderately overvalued. So we had what we call a no return bearish divergence. So you have weaker momentum, moderately overvalued, just about equally high prices, with a red histogram saying it's no return. So now that you look at that and you say, okay, we have a bearish divergence saying that crude oil should go down, then you drill down to your tick charts to time your entry. So if you look at our 500 tick chart here in crude oil, you can see where this red arrow is where your entry was. Now, why is this your entry? Well, you see the momentum just died off here. You see you had support level at 94.64. You short on the break of support with the change of color on the trender. So the trender, the way this works is it paints green price bars for bullish, red price bars for bearish, blue price bars for neutral. So once you're in it, so it changed color on the break, changed from bullish to neutral, then to bearish right after the break, just like it was supposed to. And then you sit here and you follow it and you stay in it until it changes to green again. So you can see you're entering around 94.60 and you come all the way down. You've been red or neutral, so bearish or neutral all day long in crude oil on this 500 tick chart until right there you got one bullish bar, which would have gotten you out of the trade, and that was at 91.60. So that's $3 or 3 points below where your entry was. And now we've gone to a little bit of consolidation choppiness here, and probably the move for the day is probably over. To be completely honest, I wouldn't expect it to go that much further if it does go. Now we are looking for follow through again tomorrow, but again, this is just a great example of how you can find a setup, find an outlook. So we were bearish due to the bearish divergence, and then time your entry with a tick chart or a very short-term time frame, and then use the momentum trender to hold you in a position the entire move. And this is exactly what it did there. So great job for those of you that took that trade today. If you're interested in joining us in the trading room, we would love to have you come visit. You can go to ValueCharts.com to sign up. Also, don't forget to click the link below to subscribe. And until next time, happy trading.